the economy and the volatile stock market after the Federal Reserve raised interest rates at the fastest pace in nearly 3 decades. This is affecting everything from our loans to credit card payments and even the price of gas. President Biden accusing oil companies of making things worse at the pump as well, saying that their profit margins are higher than ever. For more, let's bring in ABC News economic correspondent Deirdre Bolton for more. So, Deirdre, let's start with President Biden telling our Mary Bruce earlier today that oil companies should expect consequences if they don't boost supply. So how much responsibility do oil companies bear for the high gas prices now? And can the administration do anything here?
Kira, it depends on who you ask. I mean, what we can say is that the wild card, right, was Russia invading Ukraine. Russia, as we know, a huge energy exporter. So that just tightened supplies globally. And even though the U.S. imports so very little from Russia, it still is a global market. That is part of the reason why we have seen prices go through the roof. Another factor that we have to consider is that the U.S. is less, I would say, by about 6% of refining capacity since 2019. That was made even worse during the pandemic. I mean, honestly, a lot of refineries just shut. They were not profitable, or they were finding themselves really in conflict with new standards, trying to be greener, trying to reduce these greenhouse gases. So a lot have just shut. And by the way, no new refineries have been built in the U.S. for about 50 years. So all of this, Kira, was really primed. And what I mean by this is this tightness in the market, in large part because of the pandemic, the lack of demand, and part of what was going on with this push towards greener energy. So it seems like the handoff between traditional fuels and greener fuels is just taking a lot longer. And right now, two big factors that nobody could have foreseen, global pandemic and a land war in Europe, are affecting the bottom lines. We know that President Biden, as you mentioned, has been extremely focused. He sent a letter to the 7 major companies, just basically saying, sort it out. And of course, as you can well imagine, the oil industry is saying, listen, basically, we need a vote of confidence from you. We need approval of critical infrastructure for pipelines. We need new drilling leases. In other words, we need you, the Biden administration, to show us that even if you believe in a long-term green, you're willing to support us up front. So there's politics and economics involved in this one, Kira.
Yeah, no doubt. And the Fed also walking a tightrope, right? It wants to slow the economy just enough to bring down inflation, but not so much that it tips the economy into a recession. So where's the threshold?
That is an excellent question as to exactly what level for interest rates, where we can see where we're just skating by. All we can say is it is statistically rare to be able to engineer what you just described, which, as you know, market watchers call a soft landing. To my knowledge, in the modern era, it's been done once in 1994 under Greenspan's Fed. The difference there was that the Fed did start to raise rates in anticipation. So that is to say, before prices went higher. And as you well know, we are not in that situation right now. Our latest print on that CPI was 8.6%. We are all paying more for everything, every basic, gasoline, rent, food. So the Fed really is between a rock and a hard place right now. Of course, we saw that biggest increase in 28 years, right? The 75 basis points, the Fed projecting that it is possible to do so again. Also slightly perhaps with the hope that that will reel back some of what the Fed may consider to be excessive spending and therefore engineer this very much sought after soft landing. Kira.
So what's your advice to people concerned about all this volatility right now?
Hold steady if possible. If you are not going to retire in the next 2 to 3 years, just hold steady. Even more bearish voices out there about the stock market say, look, the next 12 to 18 months, extremely rocky, to be sure. But the bet, of course, long term is on the U.S. economy, innovation, job creation, technology. That is the longer term optimistic view. There are products in the meantime which may help people couch a few of their losses. For example, I-bonds. Sort of almost a boring product, if you like, but if you are willing to lock up some money with government bonds for a year or longer, they can return as much as 9.5%. So that is a good choice for some people who may be getting ready to retire, want to take some money out of the stock market, but still get a pretty safe return, Kira.
So as prices skyrocket across the board, we've been watching it. The average rate for a 30-year fixed mortgage now above 6%. Rent also rising fast. What does this mean for people who want to buy a home?
It means that they probably are going to be in a tougher environment, even if prices are coming down. Obviously, the fact that these mortgages have gone up so much, what that often does is it slows people down, would-be sellers, from considering putting their homes on the market, because right now, let's say if somebody owns a home and paid, I don't know, 3.75% for a mortgage, they may be loath to buy a new home, even one that they want, and start paying 6%, because that's quite a big difference. So essentially, unfortunately, Kira, we are left with the same inventory problem, which I will signal started after the last crisis, 2007 to 2009, where we have very few homes built for quote unquote middle America or middle class, Kira.
Well, we'll keep watching it all. Deirdre, thanks so much.
Sure.
Hi, everyone. George Stephanopoulos here. Thanks for checking out the ABC News YouTube channel. If you'd like to get more videos, show highlights, and watch live event coverage, click on the right over here to subscribe to our channel. And don't forget to download the ABC News app for breaking news alerts. Thanks for watching.